Hi, I'm Peter Akerley, President and CEO of Erdene Resource Development. We're a recent gold producer in southwestern Mongolia, and a company that's now going to use the cash flow from that gold production to fuel the exploration and development of the Khundii Minerals District.
Congratulations for a first pour of gold now out of the way, and as with all things like this, it's a kind of what next. So I think what next question for me is like, how do your partners kind of move obviously from this first pour into achieving nameplate capacity this side of Christmas?
Well, first off, we just hit first gold there at the start of September, and we've always laid out a plan where we'll get to nameplate over the next few months. So by year end, be producing on average 7,000 ounces of gold per month at a head grade of about 4 grams per ton. So far, so good. We're very happy with how the plant has turned on. We're running up to close to capacity on the grinding circuit. The recoveries look very good, good loading on the carbon. So everything's going according to plan. But it's the known unknowns, I guess, that you have in any startup that we have to deal with over the next few months. So we need that period to really get the kinks out and get us up to steady state. What comes next is really that strategic plan that we put in place when we decided to build, which was let's get this to cash flow, and let's use that cash flow to unlock the many other prospects and deposits that surround Bayan Khundii. So we're chomping at the bit to get started on that. And in fact, within the next several weeks, we'll start that exploration program at a level that's much more aggressive than what we've been doing for the last few years.
Right. Okay. And I will get into exploration in a second. Just kind of sticking with the kind of the money part of this equation, which is, and I appreciate you're not operating it, but your partner is. Just trying to understand the kind of the walkthrough on metallurgical recoveries and the sensitivities around that, things like, and also things like the strip ratio is what it is. How do they kind of maintain the kind of the cost side of the equation, the cost curve?
Yeah, well, let's start with the strip ratio. Let's start in the pit. And when we did the initial reserve on this in the feasibility study, we had an $1,800 gold price. The cutoff grade was about 0.75 thereabouts. With the increased gold price, we now have a whole lot more gold in the economic category to deal with. That cutoff grade has moved down to somewhere closer to 0.4, 0.45, and we're working through that. So we will be stockpiling much of that lower grade material to move into the mill at a later stage. But a good problem to have. There's some other opportunities I could share with you a little later, perhaps about the opportunity for heap leach and or blending that low grade with some higher grade material as we move forward. In terms of recoveries, this ore is spectacular, really. It's almost devoid of sulfides. It's a gold with a little bit of silver mineralization, and the recoveries are in the 93 to 95% range using a standard conventional crush grind leach facility. Low retention times, low cyanide consumption. We produce a gold doré that is sold to the state at spot effectively, and that first sale has already taken place. We expect another one before the end of September. So, pretty straightforward process. As I say, there's always the known unknowns that may come up as you're moving through the fine tuning of this plant, but it looks very strong so far.
Okay, so because I think it was during commissioning and ramp up, you kind of learn a few things along the way in terms of how the plant is reacting. So think for things like, say, the ore, I guess, hardiness and the kind of grind size optimization, etc. Are those the sorts of things that are being smoothed out during this kind of ramp up?
Yeah, absolutely. I mean, I think it takes those people that have been through this before, and we have a number of them on site who kind of work with that hardness factor. How much can you push to capacity, the SAG mill and the ball mill? How much loading do we need to put in terms of cyanide into those tanks? So there's many things that are a bit of trial and error and constant sampling as you move through that plant to determine where that ideal equilibrium is for each of those pieces of equipment. We're also dealing with a dry stack tails on the back end of this. So we're doing a filter press tail, And that's something new in Mongolia. So just making sure that's working properly, getting that into the dry tailings facility. All these things are new to much of our team. So as I say, working the kinks out as we move through that. But so far, very positive outcome.
Okay, and things, I guess, that also things like, I think you talked about the past like 6 years of reserve. How do you, what's the timeline and kind of cost kind of convert you sort of near mine resource into reserve and even, extend life? And I guess in that context, what's going on with the sequencing of Bayan Khundii versus the dark horse ore?
Yeah, so lots in there to talk about. In terms of Bayan Khundii pit itself, we've identified expansion opportunities to the west and south, regardless of the gold price increase. Those areas we will begin drilling on as soon as a few weeks from now and begin to look at what potentially is another 150,000 ounces of gold as we move south and west of that pit, which contains about 500,000 ounces. In addition to that, we'll be stockpiling the low grade. So there's great growth potential there that can add 2 or 3 years, really without any additional permitting, any additional work other than some limited drilling. So low hanging fruit. North of that, 2.5 kilometers north of that, is the Dark Horse deposit, where we have a supergene oxide zone, as you know, contains 50,000 ounces of very high grade 7-gram material just sitting at surface. But that is an area that has not seen the level of exploration we've done around the Bayan Khundii area. So that's kind of the second objective as we move into Q4, is to quickly get up there and start to push that along strike. And, I can't promise 7-gram head grade from all of that material, but we do know that for over 1.5 kilometers of strike length, there's oxide material in the near surface. So to get in there and start to firm that up, not only provides us with potentially more ore for the CIP, but if it's actually oxide and of high enough volume, we can begin to look at a second heap leach facility that complements the CIP plant. So that's kind of a new opportunity that we've introduced into the mix and put up the priority list because it is lower cost capital and OPEX. And we feel that the oxide scale is quite significant given the decreased head grade that we need to deal with the higher gold price.
And how do you treat things like sustaining capital versus the kind of exploration around the feeding the plants? Is there any kind of conflation or confusion over that?
Not necessarily. No, I think there's 2 completely separate divisions that manage that. We have the mining team that's responsible for the pit and the exploration team on any of these expansion areas. So those dollars and those plans are well divided. Given what we've discussed before, the Erdene team, it's done very well at the exploration side, and it'll continue to do that, and it'll feed projects once they get to that reserve stage into the mining team to then take care of to move it towards the plant.
Right, and so things like, and look, I know this is, but you want to get over onto the exploration. I promise you will in a second. But things like you kind of mentioned maybe sort of tailings management and dry stack performance, etc. in the past, and certainly in the context of water base where you are. Can you talk about some of those sort of challenges in terms of water balance or even like filter performance and things like that? Are those ongoing challenges, or are they performing as expected?
So from a water balance perspective, we invested heavily in securing the necessary water supply, largely from fracture-related aquifers around the site. We have a large bore field that provides that, so no issues in terms of availability of water. If we were to triple the size of this, then you're going to have to do some additional exploration, but at this point, sufficient quality of water. In terms of the dry stack tails, it's really too soon to assess whether or not there may be issues there, and I'd say that as you move through the entire plant. We're 2 weeks turned on, so we're still working through each of the circuits, if you will, to identify what could be potential issues. But for anybody that's worked around the filter presses before, they can cause a log jam, and it takes some work to figure out exactly how to manage that. In our case, we will be putting relatively dry tails into trucks, but in minus 30-degree weather. So how are you going to deal with that as you get it out under the dry stack tails, smooth that out, and continue to be on schedule? So there's things that will come about, particularly as we move into the cold weather period, that will be new to us and the people operating the plant that we'll deal with as they come up.
Right. Okay. Well, okay. So there's a lot going on there, and I guess like a continuous kind of feedback loop, which you're involved with. The bottom line, once you get into production, is do you hit your quarterly targets? That's all anyone's going to care about, and more importantly, the capital allocation from your share of the proceeds. So, right, sorry, what's exploration? Can you just talk about, where you've talked about some of the exploration thought pieces there this year? How's that going to move into next year? What budgets have you allocated to the different projects, whether it be Bayan Khundii, Dark Horse, Ulan, or Altan Nar?
Yeah, so as I mentioned, if you look at it in sequence, the near-term opportunity is to expand the Bayan Khundii pit from 500,000 to potentially 650 to 700,000 ounces, given exploration success and the decreased cutoff grade that we can deal with. So that work will be undertaken in Q4. We'll firm up those resources. We're pretty comfortable with the numbers that I just shared with you in terms of what that target size is. And that effectively gives us another 2 to 3 years of production at the current level of production for Bayan Khundii. From there's a couple of different areas that we will be looking at. One I've shared with you previously is that there is a piece of ground that sits between our Khundii license and the Ulan exploration license that we control that is part of the state license, Huransab. The government has stated that their intent is to look for investors through a tender process to open that up. And should they do that, we immediately free up additional resources up against our boundaries on the West Striker and on the Ulan side. So we are talking to government about that. We see that as an opportunity that could unfold in 2026 and pushes that target of 150,000 ounces that we see in the west side of Bayan Khundii to significantly more than that. It frees up material that's otherwise bound up against the borders, but also potentially a relationship with the government resources. So that's kind of the low-hanging opportunity as you move west. As you move north, as I mentioned, the second priority is to get into that Dark Horse strike length. There's 50,000 ounces sitting at surface. There's 1.5 kilometers of strike length. We'll be drilling up there very rapidly. And we have dedicated about 2 million Canadian to exploration drilling as we move through October into November. As we move into 2026, we'll begin to advance those areas through the technical studies necessary to bring those into the reserve category. So a bit more drilling, some study, some metallurgical work. On the metallurgical work side, effectively with the oxide at Dark Horse and the ore at West Striker, they're both very amenable to the CIP with similar recoveries to what we've seen to date. And then there's Altan Nar. So Altan Nar sits 16 kilometers north of the Bayan Khundii complex. There's 500,000 ounces of gold there today at close to 2 grams per ton. It is polymetallic, so it's a bit of a different system in terms of how we handle it from both drilling, but more importantly, processing and metallurgy. But we're preparing to move into that in a significant way. We see that as the second development. With some expansion at Bayan Khundii and Altan Nar coming on, we could start to envision a 200 to 250,000 ounce per year production profile from the two. And potentially with success at Bayan Khundii, that even being increased further with a bit of a complement there on the heap leach side that could also add to that as well. So that's kind of the steps that we're looking for in terms of development. Next year, we've allotted about $7 million US to exploration, close to 10 million Canadian.
Okay. So you said something earlier, which I suddenly realized that perhaps I can't quite remember the structure in terms of your alliance with MMC, Mongolia Mining Corporation, in terms of the cost sharing agreement, the decision-making structures, and ultimately, how any new ounces, which you will be discovering through exploration, will kind of feed into the plant and how that kind of breaks down.
Sure. Let me
remind me.
Yeah. So it's a 50-50 joint venture at the subsidiary level with MMC. Effectively, all decision-making is through unanimity. We have equal numbers on the executive and equal numbers on the board. I'd say we're very well aligned on the growth opportunities in front of us, and the budgets I just discussed with you were presented when I was there last. So,
50-50 of what? just to be clear about 50 on what?
50/50 of the shares of the subsidiary company and a 50/50 split in the profits once we get to that point.
Great. Okay. Got
And
it.
just to
Understood.
maybe expand on that a little further, we ended up with about 140 million spent in total, 115 million in capex, and the debt portion of that, which is 60 million MMC and 50 million for the development bank, will be paid off as rapidly as possible. The only exclusion to that will be the monies we invest in exploration. So as quickly as we can pay down that debt, which at these gold prices sees us paying it off before the middle part of next year.
Okay, because they're kind of reasonably high interest loans.
13.8%.
Yeah, so it's a bit kind of punchy, but it's kind of got you to where you need to be. So, and as you say, if you can pay it down quickly, who cares, right? And let's get back to kind of a little bit more on the exploration. Just help us, because you've kind of got some ultra high grade intercepts, like super high grade intercepts, and you've also got what looks like indicative of some bulk tonnage as well. You know, like, so can you talk about, like at Ulan, for instance, like, can you sort of talk about how where you kind of prioritize and where you focus over and above the kind of exploration that you've just described?
So in terms of the high grades, you may have seen some of the results that came out from our infill drilling, and we had up to, I think it was 2380 gram per ton intersections within the pit, and a number of 300 to 600 gram intersections. So extremely high grade, very unique for a near surface open pit. We will maintain that initial head grade in that 4 gram per ton range, as we indicated in our feasibility study. And what that means is that you're producing a whole lot more low grade, as I mentioned earlier. So can we, as opposed to stockpiling that low grade, start to look at moving that into a heap leach facility is one of the things we're evaluating. That is much more likely to be the case with Dark Horse, which is oxide, than it is with the Bayan Khundii material, which is more of a hypogene or silicified material. But let's see, we'll go through those studies. I would suggest we have in excess of 200,000 ounces of material that sits in that low-grade, subgrade stockpile that we can deal with. So we'll be looking at that. When you talk about the bulk tonnage at Ulan had an intersection of 330 meters of over a gram of gold. And if you think about what I discussed with the government piece, that's on the back west wall of that pit. So you are potentially driving from Bayan Khundii over half a kilometer to hit that 330 meters of a gram. We don't fully understand what's in between because that's partially on the government license. But on our side, on the other side near the Bayan Khundii pit, we had 40 meters of 7 when we drilled there in October last year. So there's a very large continuous ore body that continues to the west. And that really opens up this for a much larger scale bulk tonnage opportunity. But we'll see where we get to in terms of the government discussions on them issuing the tender on that. Should they not, we have options for either smaller open pits on either side of our license and or in the future looking at underground opportunities. So a host of opportunities in all of those areas, from additional high-grade feed to bulk tonnage, lower grade, increased scale.
Okay, like I say, you've got lots of optionality across the board here, multiple assets. I'm just trying to understand, I guess, the opportunities in front of me just a little bit more. So picking up there on the pit shell, how are you kind of vectoring in, or what are you following geologically to kind of extend that mineralization at depth below the pit?
Well, so we've had a number of experts associated with the disciplines you would need, whether it's the epithermal system or the structural relationships. Dr. Emil Kloppenberg helped us understand the structural architecture, so that's been helpful. And without getting into too much detail, we have a good understanding of what we're looking to follow. There are these bounding feeder zones that carry those high grades. So when I talk about 40 meters of 8 grams, those are the zones that we're chasing at depth. So yeah, we sort of have a number of different experts that are associated with us in terms of understanding of deposit architecture.
Right. So, okay, it'd be kind of good to kind of get into that as you learn a bit more. At Alta North, for instance, you kind of got this kind of polymetallic going on. You got gold, silver, lead, zinc, etc. Again, does that sort of shape? How do you view something like this? You're looking at, look at the contained metal, look at the recoverable metal, look at the repayable metal, and then we'll work out whether we can sort of how to prioritize that versus, there's some of these high grade opportunities in front of you.
Yeah, so the first thing, Alton Nar does have significant high grades. We have intersections there similar to what I've just discussed at Bayan Khundii. But the difference is obviously in the polymetallic nature. We need to do additional drilling there to understand the full character of the ore body. We have 500,000 ounces in two relatively discrete areas that are within a 5-kilometer trend of mineralization. So in particular, when you're dealing with polymetallics, you really need to understand the dominant ore characteristic before you define what process you're going to employ. With polymetallics, it could be straight out concentrate. If it's large enough, it could be bio-oxidation or pressure leach. So these are the types of things that we'll look at once we understand the full confines of the ore body. Ideally, I believe we'll see in excess of 1 million ounces of gold equivalent by the time we do this drilling. And then we'll step back and do those trade-off studies. One of the other options at Alton Nar is that, if you push that high-grade cutoff up, you could have 300,000 ounces of 5-gram material that you could pull down to Bayan Khundii. So that's part of that trade-off as well. And that work can't be done until we carry out the drilling and then carry out the process test work, which is where that additional $7 million of exploration spend next year comes in, much of it weighted towards Alton.
Okay, and talking of trade-offs then, in terms of the drilling philosophy, as it were, in terms of resource conversion versus step outs, how do you kind of balance the kind of short-term needs versus the kind of district scale opportunity? And I think you're going to have the money to kind of get after both equitably.
Well, I believe we will have the money to get after both equitably, but I would say that our focus right now, partially because of the riches that we have available in the near surface, is to establish that next development scenario. Whether it's Alton Nar or whether it's the oxide or expansion around Bayan Khundii, those three things can provide us with potentially a doubling of the current production profile. And the deep exploration that's going to happen in this district will happen later. There might be the odd exploratory hole that we push out there to follow up a structural concept. But generally speaking, we're looking at the top 200 meters of expansion opportunities in each of those three areas.
Okay, so and if so, then how do you define discovery? Because obviously people would be looking and say, well, hey, what's the discovery cost metrics that you're using? What are the discovery costs? And therefore, is that a good allocation of capital versus the kind of drive for, increasing value as far as your shareholders are concerned, at least?
Yeah, that's a good question. I think when you look at Alton Nar, much of it is pure exploration. As I mentioned, you have 500,000 ounces, but that's just what we drilled off over. It's probably a kilometer of that 5-kilometer strike length. So everything outside of that is purely new ounces being added. So I would say much of the exploration dollars spent there is that new discovery. The same could be said about Dark Horse. We have 50,000 ounces, 7 grams with that 1.5 kilometers, where we're dedicating much of the exploration dollars would be accretive to the inventory today. So much of it, I'd say, is new exploration. More, I wouldn't call it grassroots exactly, but definitely new ounces in the inventory.
Okay. Well, again, I guess we'll stay in touch, kind of work out how this kind of multi-mine hub potential works out, and so you can actually start defining some sort of sequencing strategy to that. And I think one of the things which we've not really talked about much is the importance of amateur gold, relative to the kind of it's copper versus the kind of gold pipeline. Chasing porphyry systems is expensive and time consuming and all the rest of it, but do you think there's real value in it, and do you think that when do you think you're going to sort of get after that?
So we're after it as we speak. We have teams on the ground.
Doing what?
So currently we have drones on the property doing magnetic surveys. We're doing a gravity survey. We're going to follow that up with extensive IP over the entire license. We've just had a team out there doing prospecting and mapping. We'll follow that up with some soil surveys. I don't think you get very many opportunities in our business to park yourself 5 kilometers from the license boundary of one of the world's great copper gold projects. When this opportunity came up, it was a no-brainer as far as I was concerned to take the option to give it a shot. We know that right up against the boundary with Oyu Tolgoi, 5 kilometers north, there is mineralized copper gold material within 100 meters of surface. When you go south of us, that trend continues. There's another porphyry license or porphyry prospect with mineralization. So we're right in the heart of this unexplored trend. This is a license that, since 2009, nobody's been able to explore because it was under closure by the government and opened up in 2023. And so, I'm excited about it. It's largely conceptual. It's on the right trend. We've seen some good geochem. We picked up some anomalous gold material at surface. So, I think it's a fantastic bet on a fantastic belt. And we'll see where we go. We'll get some drill holes into this early next year and wish for success, but it's right place, right attributes at surface, and exciting project.
So obviously there's some stage payments there and some exploration spend expected from you, but I guess with revenue coming in now, the decision-making timeframe is in your own hands, right?
Well, that's right. The level of expenditure and payments to the vendor are quite reasonable. We'll spend a few $100,000 to get this up to the drill stage, and perhaps as much as $500,000 with that initial drill phase. And the initial payment to the vendor was $200,000. Like we have another $400,000 in payments next year. And you can imagine the scale of this if we're successful to a minor degree. I mean, it's very accretive to shareholder value if we come up with a hit. Porphyry exploration is expensive, but to be able to be in a place like this with the prize as large as it is, well worth the expenditures. We're not locked into, 50,000 meters of deep drilling. Let's see where we get to next year.
Okay, so obviously you mentioned Oyu Tolgoi, and it's well known. It's a massive project, and it's great to kind of, and very easy to kind of casually say, that we could be looking at the next one there. But in terms of how you go chasing after this, in terms of that geophysical or geochemical anomalies that you'd be looking for, your team has been tasked with what specifically to be able to work out if you do have the opportunity to find another Oyu Tolgoi.
Well, so the first thing is that you look at the alteration features at surface. Do you have an indication of potassic alteration? Most importantly, can we get some geochemical identification near surface? So that's the rock chip samples in the soils. The geophysics, most importantly, we're looking for a chargeability anomaly. That simplifies things, but there's a number of things that we'll tease out of gravity, mag, and IP. And importantly on this license, have a deeper look. So we'll be running geophysics that'll look down 1.5 kilometers, and we'll have targets from surface down to that depth, and we'll line up some drill targets for the spring of next year.
Okay, so get after that kind of, I'm saying, sort of geological model, and hopefully find that mineralized corridor. Zun Mod. Again, something we haven't talked about much recently. Is there sort of an updated independent resource?
There is, yeah. So we've spent a lot of time on the molybdenum market, largely in China over the last 6 months. We've had people on the ground dealing with upstream producers and really trying to understand what sometimes is a bit of an opaque market. But there's no question today that there is a deficit. China's importing a significant amount of molybdenum today, and that's pushed the price up, which had been hovering around $20 and stable in that last 4 years or so, into that $25 price range. You're seeing a couple of projects coming back to life around the globe, but I believe Zun Mod is in the premier position to provide the market that is in most need of molybdenum, given we're only 200 kilometers from the border and where there is rail and road. So what we've done in the past 6 months or so is we have done a compilation of the new drilling that was done since the last resource was issued. We've relogged the core, and we've come up with a new geologic model, and we'll be issuing an updated resource estimate on that in the next several weeks. With that, we're now starting to look to understand various concepts for development, scale, most importantly. But I do feel like Zun Mod can be in that 10 to 30 million pound per year of production And we're just working through, again, the trade-off studies on each of those scenarios. So as we move through the latter part of this year and into next, I would expect we'll be finalizing those economic studies and coming out with a PEA as we move into 2026.
Okay, so but I guess then there's I assume there's a lot of kind of shared infrastructure in terms of roads and workforce and power lines and all that kind of good stuff.
Yeah, I mean, we've moved this project forward from a upsizing perspective, but perhaps the most important element here, in addition to the Chinese deficit, is the fact that infrastructure has come to us. We now have rail blacktop highways 40 kilometers into the border to access metallurgical coal. And in fact, just 2 weeks ago, I flew over a coal road being constructed that passes within 25 kilometers of the Zunmot deposit. So, and on top of that, we brought in power from the Inner Mongolia power grid system. Not sufficient to power up fully Zunmot, but an indication of the corridor that we can use and the ability to source that power, which is available on the Chinese side.
Interesting. You'll have to, there'll be a time in the future you might have to work out whether you're a gold company anymore between those.
In addition to having this individual working on the market, and I mentioned the opacity of it, he has been in contact with a number of potential partners who have deficits in their ferromolybdenum plants. So there's a lot going on behind the scenes there, and we'll look at what we should do with that corporately as we move into next year as well.
Interesting. Copper and moly, always interesting. Okay, so look, I guess that's the kind of operational, explorational sort of update, and you've also mentioned maybe some of the balance sheet discussions as well. How are you feeling about the market at the moment? Obviously, I didn't get to see you in Beaver Creek or Colorado Springs because you were busy watching gold being poured. So more interesting. Your stock has reacted really, really well, really strongly this year for sure. Access to money I imagine, is not an issue, and with a revenue stream. Now, your profile's changed dramatically since the beginning of this year. How are you using that to your advantage, your shareholders' advantage?
Well, I don't know if it answers that question specifically, but one of the main things we orchestrated on that side was a share consolidation, which you're aware of. We did a 6-for-1 consolidation that came into place just a few weeks ago. And the reason for that was our changing profile and the investors that we need to attract moving forward. They scale up into that larger institution. And in order to attract them, we felt that we needed to have that higher share price that gets you above certain thresholds amongst various groups, indices, exchanges. And I believe that's worked, actually. Obviously, we're fueled by the higher gold price, but we are attracting larger volumes of trading dollar-wise, and I think that's partially because of that consolidation that's taken place. We're cognizant of the fact that we've moved from maybe a largely retail crowd into more institutions and doing what we can to satisfy their needs to attract them into purchasing our shares.
Well, I think producer re-rate is always attractive to institutional investors, and perhaps some of these, the retail will come along for the ride as well. Well, Peter, as always, appreciate the update. Things seem to be moving at the right direction, at the right pace for you. So keep it up. We'll see you soon.
Thank you, sir. Appreciate it.